Hi, good evening. This is Sir Hassan Dosani. How are you guys doing today? Excellent, awesome. So, welcome to the third day of our Practice to Pass session on SBL for September 2020. I welcome students who have joined today for the first time, and as usual, just let us wait for 1 or 2 minutes maximum for our fellow students who are struggling to join in. Let's give them a benefit of doubt for 60 more seconds. Right, so let's begin with some basic housekeeping things. The way you can ask me question is you can type your questions in the question box, which you can see on your screen. And after every couple of slides, I will take a pause and I will read your questions and try my best to answer as much as possible. Please try and restrict your questions to the topic under discussion only. And in case I am not able to answer your question, then you can also post your question on the WhatsApp group after the webinar. Those of you who are not part of my WhatsApp group, here is my WhatsApp number. Okay, here is my WhatsApp number. Please save it and message me on my WhatsApp and I will add you to my global SBL WhatsApp group. Okay, so what's the plan for today? As usual, we will first talk about exam technique, and today we're gonna talk about time management, one of the most weakest area of SBL and one of the most this is one of the area where the examiner is most concerned. In all the examiner's comments, examiner cries about bad time management. After that, we will today we will focus more on corporate governance areas, which includes the board of directors. I will be going through several small but important areas. After that, we will talk about family owned versus listed companies. Then we will do a good comprehensive question on these topics. And then we will talk about something important again, which is integrated reporting slash six capital. Okay. Um, After we'll talk about integrated reporting, we will do another question on integrated reporting so that we are able to apply the concept in a real exam question. During these two questions, we will today understand what is skepticism skill, and we will also apply evaluation skill, which we already talked about in the first class. And as far as formats are concerned, today we will be using something called section of a report. Right. So today's exam technique is time management. Can I quickly look at the questions? Okay. A couple of comments that my volume is low and the ACCA technical team will definitely look into it. So before we talk about time management, those of you who have given SBL before, how many of you struggled with time management? Can you please say yes in the question box? I want to see if you guys have faced this problem. So when I say bad time management, it could mean two things. Either you were not able to complete the paper, maybe your last requirement or last couple of requirements were missed, or you were able to complete the paper, but the quality of the last answer was really bad. You know yourself that you just wrapped it up and packed it up and you just managed to kill it, but it was not a good thing. So how many of you have faced or experienced time management issues? Yes. I'm just reading through the comments. I took too long on questions, won't complete the paper. I couldn't even complete the exam. Able to complete, but quality suffered. Last hour is always flying. That's a good one, Janet. Yeah. So listen, I personally feel that time management is one of the core techniques which is make or break. Either this will make you pass or it will make you fail. Okay. So there was one student, one of my previous students of physical batch, and he was an average student with average English skills and average drafting skills. Okay. And when the result came, he came to me and he told me that he failed. Okay. And I asked him, oops, how much did you get? And he told me that he got 45 marks. So he failed, obviously. Okay. And then I said, were you able to complete the paper? And he said, nope. And then I said, how much you think you left? So he was like, paper was 100 marks. So he was not able to attempt 15 marks. So he actually attempted 85 marks. Okay. And out of 85, he scored 45 marks. And obviously he was failed, right? But in my view, he was pass. How come? So if you divide 45 marks by 85 marks, what he had attempted, it's like 53%. So in terms of what he attempted, he passed. Now I just told him, listen, my friend, you attempted 85 marks, you scored 45. In my interpretation, you actually passed. Now, had you attempted 100 marks paper, you would have got approximately 53 marks. Now, it is not possible in SBL to attempt for 53 marks, to achieve 53 marks by just attempting 85 marks. Do you understand? And this is applicable for average students. There are exceptions. There are superman and super women who can achieve 53, 55 even by attempting 85 marks. I'm not the best judge. You are a best judge of your own capabilities. So this is the actual secret. If you need to pass SBL, you need to attempt 100%, and I can guarantee you, using our techniques and all the other hard work we are doing, I can guarantee you will pass if you attempt 100 marks. But if you attempt 85 marks and expect to get 50, that is a difficult shot, not impossible, but a difficult shot. So now you guys understand the importance of time management, that you have to complete 100 marks paper by hook or by crook. Now how do we do that? So the first of all, we all know that our SBL paper is exactly 4 hours. Okay, so out of those 4 hours, we will allocate, or we are supposed to allocate 1 hour to reading and planning, and the remaining 3 hours we have to devote to drafting or writing. This is how we break the 4 hours: 1 hour for reading and 3 hours for writing. Okay, so let's talk about reading. So in your case, there will be when you read your exams, there will be a overview or introduction about the company, and then after that followed by tasks, okay, or questions, and then there will be 6 exhibits. That's the standard format of your paper. There will be an overview or introduction, and then questions, and then followed by exactly six exhibits. Okay, now there are 2 types of exhibits. The first one I call is one to many, and the other one I call is 1 to 1. Okay, so how many types of exhibits are there? There are 2 types of exhibit: 1 to 1 and 1 to many. Now what is the meaning of 1 to 1 exhibits? Just 5 seconds, think or try to guess. What is the meaning of 1 to 1 exhibits? Just think, no need to write. A 1 to 1 exhibit is that exhibit which pertains to one question only. Okay, so that exhibit or the information in that exhibit will be or is supposed to be used in only one particular question. Okay, it's a very, can I say, specific exhibit to be used in one question only. That is why it is called a 1 to 1 exhibit. And then there are some 1 is to many exhibit, which means that that exhibit contains a variety of information which is supposed to be used in multiple questions. I will repeat, a 1 to many exhibit is that exhibit which contains a variety of information which is expected to be used in several questions. It's not 1 to 1. Okay, right. So can I ask you a question? In your opinion, which type is more difficult, 1 to 1 or 1 to many? Which exhibit is more difficult to handle or understand, or from a time consuming point of view, which one is more difficult, 1 to 1 or 1 to many? Now there are few people who are saying 1 to 1. Sana is saying 1 to 1, and then Muhammad Motassim is saying 1 to 1. Very interesting, but 95% of you guys are saying 1 to many. Okay, definitely 1 is to many exhibit is more difficult. Okay, because it's got a variety of information. You need to highlight, then you need to referencing, you do your referencing. So you need to keep all the tasks in mind. Some paragraph or some information will pertain to task 1A. Some might pertain to task 3C. Some might pertain to task 2B. So it is a lot of multitasking, and you need a bit of speed and bit of, IQ and smart, fast thinking to handle one is too many. In contrast, one is to one is relatively easier because it's just containing one type of information to be used in one particular question. Okay. Now, let me give some examples. Generally, out of 6 exhibits, on an average, 3 exhibits are one too many, and the remaining 3 exhibits are one to one. Okay, that's average. It could plus minus 1. Okay, but on an average, half of them are one too many and half of them are one to one, and they don't follow a necessarily any sequence. Okay, do not think that the first 3 will be 1 is too many and the last 3 will be 1 is to 1. There is no sequence. They can come as and when the examiner want them to see. All right, so now we need to develop a skill to be able to judge or decide whether this particular exhibit is one too many or one to one, right? So generally, board minutes are one is too many. Most of the time, whenever you see a board minutes, 90% of the time, it will contain a variety of information, because obviously the board of directors, they talk about a lot of things around the business. So its board minutes are generally one is too many. Annual reports. Okay, so if you see companies' annual reports, that's a holistic report talking about all the aspects of the business. So that's, or even a website page, a website introduction page. A website would also contain business information, financial information, ethics, and all those kind of things. And also transcripts. What is the meaning of transcripts? Basically interview transcript. So sometimes they interview the CEO, or they interview a director. So the discussion they have, it is presented, and that's called a transcript. Okay. One-to-one, generally financial projections. Financial, not final. Financial projections are one-to-one, or financial statements are one-to-one. Spreadsheets or data, any analysis given, are one-to-one, and other general specific things, it can vary from anything to anything. All right, so one more thing, newspaper articles. They are also generally, most of the time, like 70% of the time, they are one is too many. So now, why did I tell you this long story of one is to one and one is too many? Do you know? No. Okay, I'll tell you. It's kind of impossible to read the entire thing in 60 minutes. So like, it's not possible. Okay, even I take like 70 minutes. For few of you, it might be possible. I'm just talking about vast majority with average reading skills. Okay, so do not hold me word to word, but by and large, you listen, you need to read the overview, then you need to read the tasks. Then remember, we need to make a list of the tasks. Okay, so for CBE students, we copy paste the task. It's relatively faster, but for manual students, they need to make a list by handwriting the topics on the last page. It takes them like 7 6 7 minutes. That needs to be done, and then you need to read the 6 exhibits. So in all, 1 page, 2 page, 3 page, and approximately 10 to 12 pages of reading and thinking. It's by and large not possible to complete. Okay, trust me on that. So then, which exhibit should we read, and which exhibits should we defer in case 1 hour is finished? That's the question. So can you guys think that if you can only read 3 to 4 exhibits, then which one would you prefer to read first, and which one you would prefer to read later when you start answering that question? What do you think? Very interesting. So 50% or like 70% of you are saying you will read one is too many, but 30% of you are saying you will read 1 to 1. Okay. Okay. I want you to read 1 is to many firsts. You will first read 1 is to many. The reason, and we will defer 1 is to 1 for later in case our reading time is up, if the 60 minutes are completed. So whatever exhibits are left, they should be 1 is to 1. The reason I'm saying that we should first read 1 is to many is for 2 reasons. Number one, 1 is to many carries higher mark. Okay. Because the larger the important questions, generally they are extracted from 1 is to many. But this is not always the case. Number two, the examiner really wants to see your linking skills. By linking skills, I means that he wants you to link the information from here and there, and pick up from variety of sources. And number three reason is you are fresh. So you are just started the paper, your mind is not yet tired, you are alert, you are fresh, you are able to concentrate. So it's always better to start with the difficult thing first when your mind is not tired, right? So generally 1 to 1 is easy. So even towards the end, if we read, even if we are tired, we will be able to handle them. So please, the bottom line is that we will first read 1 is to many, and then after that, whatever time is left in 60 minutes, we will read 1 is to 1. Okay, let me look at questions. How can we know which is 1 to 1 and which is 1 to many? Press release. How about press release? Press release generally is 1 is to 1, but generally, but not all the time. Okay, how do we know it's 1 to 1? My friend, I think you were not concentrating or what? I gave you a whole list of things. For example, about minutes is 1 is to many. And obviously, when you will read the exhibit, or you would take a look at the exhibit, you will be able to judge. Okay, you may not be 100% accurate all the time, but still 80% of the time you will be able to judge. And there's other question which was interesting. Okay, this is Rea. I don't know how to pronounce it. Sorry. Sir, when planning and copy pasting the information from one to many, do we copy paste in various requirements to which they relate? Of course, yes. Okay, I'm not even going to read the second part. When you are reading 1:1, you just paste all the information in the respective requirements simultaneously. Okay, press release, it is generally 1:1. Please show examples of 1:many and 1:1. Of course, I will show you example. We will do a practice now. Is there a separate reading time in SBL which you cannot attempt? No. SBL is a 4-hour paper in which there is no separate reading time. The full 4 hours you can read and don't draft anything, or you can draft and don't read anything, or you can do both, or you cannot do both. Up to you. Full 4 hours is yours. That is why we need an internal discipline, that we read for 1 hour and we write for 3 hours. Okay. So we'll referencing the reading onto my menu. I don't, Amit, I didn't get your question. So we will reference while reading one-to-many, right? Of course. Why read the exhibit first at all? Chris, I didn't get you. When copy pasting from one to many, how to remember all the tasks at the time of reading? Muhammad Ibrahim, I will shoot you if I see you. In my first class, the first technique I told you was how to link, and in that we discussed that we need to make a list of requirements. So please, if you are absent, then look at day 1. Okay. Can we conclude that an exhibit with figures is one-to-one exhibit? Yes, most likely yes. Do we have to copy paste while reading? Not really. First complete one exhibit, then copy paste the highlighted portions. Okay, you never know what's going to come if you continue reading. So at least complete one exhibit, then copy paste, then move to the next exhibit, complete the reading and highlighting, then copy paste. How to reference with CBE, Zafar, please watch my day 1. In my day 1 webinar, the first thing I started was how to do referencing. Okay, without that you are wasting your next 4 days of the webinar. So please take out extra time and watch day 1. Okay. Okay, now enough. So normally, now I'll just quickly read. Okay, normally 3 exhibits are one-to-many. These are time consuming. Examples include board minutes, annual reports, website, newspaper, transcript, interviews. First read these exhibits and do your reference. Now I'm just reading because I explained to you in a lot of detail the entire thing. And the remaining 3 exhibits are one-to-one exhibits. Just take a quick look, say 1 or 2 minutes, like when in the first 1 hour. Just don't completely ignore it, but just take a 1 minute overview, and then we can do the detailed reading later. Example includes financial projections and specific spreadsheets. Read these later if you are left with 0 reading time. And the most important, what to do if the reading time is up and your exhibits and you are on 4th exhibit or 3rd exhibit or 5th exhibit. What to do? 60 minutes are up and you are just starting your 4th exhibit. What will you do? Very good. So guys, if the time is up, you need to stop. Stop reading and move to drafting. Okay, so this is a habit which is required in SBL. Maybe you have never ever done this in any other paper, but in SBL, time management is so important that if your time is up, you stop and you move to the next portion. It doesn't matter if you leave it incomplete. Incomplete is a lesser sin. Okay, but time management or time mismanagement is a bigger sin. Do you understand? Incomplete answer is a lesser sin, and bad time management or incomplete paper, or you not following the time management rules is a bigger sin. So we have to move. Okay, get in the habit of leaving and moving. Now come to the writing time. Obviously 3 hours is allocated for writing time, which means that we allocate 1.8 minutes per total mark. Ladies and gents, please look at this. It is 1.8 minutes per total marks. You remember yesterday's lecture in which we were deciding number of points and number of lines to write. There are two types of marks. There is technical marks and then there is professional marks. And if you add technical plus professional, it gives us total marks. Okay. So again, here also we will apply time management based on total marks. So if the question is, let's say 8 marks is technical and 2 marks for that question is professional, total marks is 10. How many minutes will you give to this question from a drafting point of view? And if you guys will not give me the right answer, I will throw that person out of today's webinar. 18 minutes. I'm so glad. Yes, exactly 18 minutes. Okay, based on total marks. The reason why I'm emphasizing a lot on total marks is, and listen very carefully, the reason why I'm emphasizing a lot on total marks is because the examiner, they want you to plan the answer based on technical marks. So if you read the examiners guidelines and all the help material and articles available on the ACCA's web page, they all talk about technical marks. So they would say allocate 2.3 minutes per technical mark. Okay, but I disagree with that for some reasons. My approach is more practical from an exam point of view. Their approach is more theoretical and idealistic kind of thing. So that's why I'm emphasizing that, guys, always follow total marks. Even if someone tells you technical marks or you read somewhere technical marks, ignore that. Okay. Now you have to keep track of the time. That's very important. This thing. As soon as 18 minutes are up, you need to stop your writing, leave some lines and move to the next question. Again, the same thing which we did for reading time. As soon as that reading time was up, we moved on. We left it incomplete. Exactly same we will do with our drafting as well. I would rather have 6 questions incomplete all the 6, let's say for example, the exam has 8 questions in total. I would rather have all the 8 questions completed 80-85%. Okay, each of them completed 80-85%, instead of you completing 6 questions and completely missing the last 2 questions. For example, let's say the last question was about risk management. Now, risk management is a very important syllabus area, and because of bad time management, you were not able to start the last question and the time was up. So now the examiner who is checking your paper will be in some doubts. He doesn't know whether you are familiar with the risk management area of the syllabus. So he would really be nervous to pass you. He might give you 48, 49. So it's better to demonstrate your knowledge of the entire syllabus by attempting all the questions. It doesn't matter if you attend like 80% or 85% and leave the tail end because of short time, but just follow strict time management discipline. Okay, let me look at questions. So now this person is saying, how do we keep track of time? Do we keep watching the watch or looking at the clock all the time? Now this varies from person to person. Okay, there are a couple of ways how you can keep track of time. The first way is obviously you keep watching the clock. But what I prefer is when you calculate the time, when you start the question, let's say it is 10 a.m. and I am attempting a question of 10 marks, which means I have to give 18 minutes, right? So right now it's 10 a.m. So I'm just about to start. So what at 10:18 I need to stop, right? So write this time on the question paper. So manual students, when the question number 1A is written on your question paper, you just write the ending time on the physical question paper. And CBE students, they can write the time in front of the question number on your word processor. Okay, another technique, no, that's forget about other techniques. So just time, you need to just test out which technique works for you, but the bottom line is you need to keep track of the time. You just can't take a walk in the park thinking that nothing is timed. This is what exactly is being tested. Okay, all right, so today we are done with time management. Sir, in CBE exams we will not have a clock, so how can we keep the time in track? Very interesting. I have no idea. So now Siri is saying in CBE exams we will not have a clock. That's not correct. Because from comments from some students who gave CBE in July, there is a timer which is on your screen, and because it shows you how much time is left in the 4 hours. Okay, so anyone in this webinar who has given July actual CBE paper, Ron K has given a very intelligent solution for CBE students. He's saying wear a wristwatch. Good one, I like it. So yeah, in CBE there's no clock, then you wear a clock on your head. Wristwatches are not allowed. Excuse me, I never read it anywhere. How do you know it's not allowed? I've never seen it anywhere written that wristwatch are not allowed. Smart watches are not allowed. Yes, I agree with that. Smart watches maybe are not allowed. It makes sense. But a general watch, if it is not a smart watch, is allowed. Or maybe you can keep a small watch, small table clock in front of you. Maybe let me check. Okay, I'll check with the ACCA officials and I'll get back. And I really appreciate this question. Very out of blue and took me off guard, but very relevant question. You can use computer time to check the time. I don't know. They don't allow the analog wristwatch. What's the analog wristwatch with digital? Simple watch is allowed. Timer will be there on the screen. Okay, you see, you got your answer, but still I will check whether a watch is allowed because nothing in the guidelines talks about watches. Very interesting. I'm really enjoying, you know. Okay, let's move on, guys. Now, you see, I spent so much time. I spent like 45 minutes almost on time management skill. This just shows how important it is. Okay. Now let's start with the topics. So today's topics are easy, short, simple, except for integrated reporting, right? So I will try to quickly go through these board of directors topic. It is most of it is self-explanatory, and I will just give you a high-level concept, and then you can read yourself. And if you have any questions, then later on you can WhatsApp me, and I'll be glad to help you. Okay. Now, chairman and CEO, that's the first thing. So we all know that in a company, whether it's a private company or a listed company, there is a chairman of the board of directors and there is a designation called CEO. So what's the difference between the two? So the main role and responsibility of the chairman is to run the board of directors. It is his job to make sure that the board of directors is functioning the way it should function. He is the captain of the board of directors. Okay. And on the other hand, the CEO, the main role of the CEO is running the company. The day-to-day things, execution of the strategies, monitoring all department heads and staff, monitoring the performance, risk management. Okay, so the chairman, he's more focused on the board of directors, and the CEO, he's more focused on the day-to-day running of the company. Now you guys can read through. There's individual tasks which I don't think will be tested in the exam. But more importantly, this is something I want to talk about. This can be tested in the exam. Splitting the roles between chairman and CEO. So definitely these are two separate roles, right? Chairman, his job is mainly to run the board of directors, and CEO's job is mainly to run the company. Now in private limited companies or family owned businesses, a single person, he is doing the role of both chairman and CEO. So you may have come across some person who's saying, hi, I'm Shah Rukh Khan, chairman and CEO of Bollywood industries. So this single guy is both, is excuse me, wearing the hat of both the chairman and the CEO. Okay. On the other hand, in a listed company, earlier I just talked about private company, but on the other hand, in contrast, in a listed company, it is mandatory that the role of chairman and CEO is split between two persons. The same person cannot be the chairman as well as the CEO. right? A chairman has to be Mr. A and CEO has to be Mr. B. So this concept is called splitting the role. So why is, so it is in a listed company, it is mandatory that the role needs to be split. It is the requirement of the corporate governance. It is the requirement of listing regulations that it is mandatory that the role needs to be split. So what is the reason why the role needs to be split? What is the reason? What is the advantage? You must need remember 3 or 4 advantage. The first advantage, segregation of duty. Obviously, these are 2 separate roles, and if they are done by 2 separate people, it creates segregation of duty. And then chairman is able to challenge the CEO, because chairman is another person and he is more senior than the CEO. The CEO reports to the chairman because chairman is the captain of the team. So the chairman is able to challenge the CEO. Supposing if the same person is the chairman and the same person is the CEO, now who would challenge who? Not possible, right? So if the role is split, then it's very important that the chairman is able to challenge CEO. For example, the CEO is not performing, or CEO is incompetent, or CEO is taking or proposing something which is unethical or against public interest or whatsoever. So there should be a person who will be able to look into the CEO's eyes and say, get lost. Okay. So that's another big advantage, that chairman will be able to challenge the CEO. And then other directors can communicate with chairman if they have concerns relating to CEO. Obviously, if I have an issue with the CEO, I just can't go and talk to him. If I think the CEO is doing a fraud, whom shall I go and talk to? Chairman, right? And just imagine chairman is also the same person. So I will had it, right? I've had it. So again, a very big advantage. And then lastly, higher shareholders confidence, as chairman is normally a non-executive director. So CEO is an executive director. He's a paid employee of the company, whereas chairmen are normally non-executive directors, which means they are not employees of the company. So you need to remember these 4 very important advantages or reasons why the role needs to be split. Obviously, there are certain limitations as well. There are high chances of disagreement or clash between the chairman and the CEO. And chairman may not have in-depth knowledge of the business, because he doesn't come to the office every day. He's just there on board meetings. He's more into strategy, so he might not have hands-on knowledge of the business. But despite these disadvantages, the advantages are much more, and that's why the listing regulations and corporate governance, they make it mandatory for listed companies that the roles should be split. Any questions on this particular slide? Hang on. Let me go some. Can an executive director be a chairman? Yes. Sometimes the chairman is also the employee. That means he draws a salary, but most of the time chairmen are non-executive. But it is possible that chairman could be an executive director. CEO could also be an executive director. Obviously, CEO is an executive director. Definitely, yes. What if the chairman is doing the fraud? Who will make him accountable? Oh my God, Uzair, I love this question and I don't have any answer. It's a difficult question. What if the chairman does a fraud? Hey guys, can anybody help me answer Uzair? He's asking, what if the chairman does the fraud? Shareholders. CEO will challenge. Auditor is there. There's a whistle blowing thing. There is audit committees. There is a nomination committee which deals with all the board related matters. Okay. Shareholders is there. Okay. Oh, got it. Ethics committee, very good. Some companies have ethics committee, but I think whistleblowing would be a good one. Audit committee would be a good one. Uh, if chairman is not performing, then where to highlight? That's shareholders' job, because the shareholders have appointed the chairman, and chairman is like reappointed every 3 years. So shareholders can kick him out if he is not working. Sir, who does the job interview for the CEO position? Would that be the chairman? Why, Fatima, do you plan to give an interview of CEO position? Or you want to take an interview of CEO? Interesting question. Yes, it will be the chairman. It will be a nomination committee. We will talk about it in a bit, which deals with additions and deletions to the board of directors. Who gets paid more, the CEO or the chairman? Aisha, if the chairman is non-executive, then obviously CEO will be getting more. But if the chairman is an executive director, which means he's on the payroll, then I would imagine that CEO, the chairman would be getting more. Okay, let's move on. Interesting questions, guys. The next topic is non-executive directors. Executive directors versus NEDs, right? So definition, NED is a part-time outside director who are independent, which means in simple layman language, they are not the employee of the company. And when they are not an employee of the company, they are not on the payroll, they do not get salaries, they do not get bonuses, they do not get any other benefits which normally an employee gets, because they are not employee of the company. So if they are not getting salaries and bonuses and benefits, so why the hell you think they would want to be a non-executive director and stick their neck in risky situations? Because they do get something, they get a fixed fee for being NEDs. Okay, it's not that they are working for free. They do get fixed amounts regardless of companies' profits or losses, and that amount is normally not very high, not very low, and generally the law of the land, they do define some kind of formula or range or amount for NEDs. It should not be so less that they are demotivated or not interested to work with full efforts, and it should be not so high that their participation or independence is questioned. Okay. Now, what do they do? What's the role? Very, very important. This has come in the exam. If you talk about high level, they are responsible for four things: strategy, performance, risk, and people. So under strategy, they discuss strategies, bring external experience and leadership. Because they are outsiders, they must be sitting maybe on several entities board. Yes, come in, please. Just a second, guys. So, sorry, guys, for that. Strategy, being non-executive directors, they are senior people, experienced people, seasoned. So obviously they help in making strategies for the company. They provide leadership. Performance means that they scrutinize the performance of the executive directors. Okay, someone needs to scrutinize whether the executive directors are working or not. So shareholders are either busy or too hands off or they don't have the skill set. So it is the job of non-executive directors to review the performance of executive directors. The risk management is another area which is the responsibility of non-executive directors. And fourthly is people, in which they nominate nominate new directors to the board, remuneration, succession planning of executive directors and senior executives of the company, all these things. Okay, now this another important topic. What are the advantage of NEDs, or what value do they add? Number one, they bring independence. The whole purpose of non-executive director is that they should not be biased. So they bring independence to the board and add confidence to the shareholder. Then they have external experience and wider perspective, obviously. They scrutinize and challenge the performance of CEO and executive directors. Employees can discuss confidential or sensitive matters like whistleblowing and some things like whistleblowing. It comes under the ambit of non-executive directors, and then company can comply with regulatory listing requirements. So guys, this slide is very, very important. VVIMP. You need to remember NEDs, who they are, what are their key role, and 3 or 4 advantages. Okay. There must be some disadvantages as well, like they may lack independence. So as a human being, you cannot always be very nice and angel. There might be some gray area. Smaller remuneration as compared to executive directors, so they might be less motivated, or they may not give sufficient time to business. But despite the disadvantages, listed companies, they do have mandatory requirements for NEDs. Independence of NEDs. So it is very important that the NEDs are independent. There should be no conflict of interest. They should not be biased, because if they are not independent, it defeats the entire purpose of having NEDs, right? So there are certain conditions or criterias about independence. For example, he or she should not be an employee of the company for last 5 years. So if I am the CFO of my company, right? I am the finance director of my company, and let's say tomorrow I retire from my company, I cannot immediately become the non-executive director of that same company. I need to give a gap of 5 years. So you cannot be an employee of the company during the last 5 years, because you need to detach yourself completely. You should not have any business or financial relationship with the company for last 3 years. Okay. You should not be an NED in the same company for more than 9 years. Do you get that? So you can only be an NED in one particular company for maximum period of 9 years. After that, you are not eligible, because you may lose your independence because of familiarity or friendliness. You should not have close family ties or friendship with executive directors. Your wife is executive, you are NED and your wife is CEO, or vice versa. What a deadly combination. No family members working in the company in senior position. And lastly, no share in profit or having share options of the company. You need to be very, very clear, because these are the things which are not allowed, because these impair the independence of non-executive directors. The last thing is number of NEDs. How many number of NEDs should be there on the board? 1 NED, 2, 5, 10, 100. So it all depends on the local laws and regulations. For example, New York Stock Exchange, it says number of NEDs should be X in, or it says something like more than 50%. New York Stock Exchange says that any company which is listed on New York Stock Exchange, the number of non-executive directors should be more than 50%. So not 50%, more than 50%. So for example, if there are 10 board of directors in total, 5 is exactly 50. It's not more than 50. So at least 6 persons have to be NEDs. Very, very difficult requirement. I think Singapore says 1/3 of the board should be NED. And I think UK, but I'm not sure. UK says, the UK doesn't define a number. It says sufficient number of NEDs, or sufficient enough to make their views heard. Okay, very good. But this is not going to come in your exams. It's just to give you a concept. Let me take a question. Can the CEO resign and become the chairman? Now, what kind of question is that? I just said that you cannot become NED if you are employee in the last 5 years. Okay, so if the chairman is a non-executive position, the CEO cannot become a chairman for the at least for next 5 years. Audit committees as NEDs, yes. I'm coming to audit committee. Sir, does the chairman make strategy of the company? Oh yes, strategy making is the main task of the entire board of directors. And who's the captain of the board of directors? The chairman. So obviously he has to participate with whole heart and soul. I'm just looking at questions before I move. What if a same NED will be working for 2 companies? Yeah, it's allowed. You can, I think maximum number of companies you can be NED is 5, I think, but it varies from jurisdiction to jurisdictions. Sir, what if an NED is also the NED of another company which is our major customer or supplier? I think it doesn't matter. If he's NED in both, if he's NED in both the companies, then it's fine. But the problem is if he's NED here and he is an executive director in one of our major supplier or customer, then that may cause conflict of interest. But if he's NED in both the places, then I don't think it's a problem. What is the benefit of 5-year limit for employment detachment? Familiarity threat. Okay, that's to avoid the familiarity threat. Sir, can you please say if the independence of NED is breached, can we relate any ethical way? If yes, what ethics? I don't know. If he has breached the independence, he has to resign. For example, if he has developed a romantic relationship with the female CEO, he has to either end the relationship or he resigns from his NED position. And if he doesn't, I think from a professional ethics point of view, objectivity, he's biased, there's conflict of interest, he cannot remain objective in his job, right? All right. The kind of questions now I'm getting are interesting questions, but they are not relevant from exam point of view. Please understand, SBL is a very high level strategic paper, so nitty-gritty questions is not required. Okay, now let's talk about board committees. Nomination committee, there are kind of, basically when we say board committees, there are mainly 4 board committees. Okay, nomination committee, remuneration committee, audit committee, and risk committee. Nomination committee is basically the job is to decide the size of the board, make sure that the board has sufficient knowledge, skills, and experience, maintaining a balance between the number of executive directors and NEDs, appointment of new directors, training, succession planning of new directors. So they kind of, make sure the board is functioning well. They assist the chairman in functioning of the board. Okay. And not majority of the members has to be NEDs. It doesn't, for example, if there are three directors who are member of the nomination committee, two have to be NEDs, and the third one can be an executive director. But the chairman will always be NED. Remember, even if the majority, or even if all the directors no need to be NEDs, but the chairman should always be NED. Similarly, regarding remuneration committee, as the name says, this committee decides the remuneration of the executive directors because they scrutinize the performance, they decide the package, they decide the fixed salary, they decide the bonuses, all those things. Okay. Now they need to be 100% NEDs. An executive director cannot be a member of remuneration committee because then it will be a conflict of interest because he is also getting salaries and bonuses. Do you understand? Audit committee, very important. Again, it's one of the committees which has 100% NEDs. It's a mandatory requirement. So out of 4 committees, 2 of the committees, this one and this one, should have 100% NEDs only. What does the audit committee do? They review financial statements, they manage the external auditors, they supervise the internal audit, and they look at whistleblowing arrangements. Why whistleblowing is under audit committee? Because they are 100% non-executive, right? Now look at this note, very, very important. All members of audit committee have to be NED, that's fine, with at least one member having expertise in finance and audit. So because it's an audit committee, their core task is financial statement, external auditors, internal audits. It is mandatory that at least one, if not more, at least one should have expertise in finance and audit matters. I don't want that there are 3 audit committee members. One is a pilot, one is an air hostess, and one is a fashion designer. It won't work, right? They won't understand ABC of financial statement. Then smart CFOs like you guys will take them for a ride. So that's why one of them needs to have a finance degree and experience. Okay. And lastly, there's a risk committee. It has to be majority NEDs, but the chairman obviously has to be NED. What do they do? As the name says, they implement risk management, they embed risk management in the culture, they identify risks and recommend controls, and da da da. Most important is this one. Again, I will say very, very important. This topic. What is the advantage of having board committees? Okay. Why do we need to have committees? When the full board is there, why do we need to have extra committees? Number one, committees are more focused. Committees are more focused. They give extra time. They are more specialized. For example, audit committee will consist of a guy whose expertise in finance. Audit committee will focus more on the financial statements, and then more time can be spent by committees, okay? Because the board has limited time. So finance, audits, account, risk management, nominations, remunerations, these takes extra time. So the committees, they can give extra time, they can sit late or meet more often rather than the full board. And then if you have committees, that means NED's involvement in your business is high, because the chairmans are NEDs and two committees consist of 100% NEDs. The full board can focus more on strategic and business matters. And then NEDs committees increases shareholders confidence. Okay, so you need to remember these 5 advantages like the back of your hand. Very, very important. Let me take some questions. Can you give an example of cross directorship? Okay. If NED consists of 100% in the board, then CEO and chairman remain same? No, please. Don't ask such extreme questions. Keep it simple, my friends. Many companies might not have risk committee. So in this case, which committee will take responsibility? Good question, Mohammad Hayat. He's saying some companies, small companies, they do not have a separate risk committee. So in that case, the function of the risk committee comes under the responsibility of audit committee. So sometimes they are also called audit and risk committee. And for large committee, yes, good answers. Yes, very good, Sharik, and the rest, Yogesh. Right. So someone asked, what kind of question can be asked? Okay, listen very carefully. Someone asked, what kind of questions can be asked? I think this one, this topic, advantage of having board committees. But it is SBL paper. They will never ask something so direct. That please, guys, tell us few examples or tell us few advantages of having board committees. No, no, no. So let me give you a real paper scenario. So this is this company. There's this company which doesn't have a risk committee, and the tasks of risk committee are being performed by audit committee. Okay. And then there was a lot of information given about the audit committee. That audit committee, they look at financial statements, they look at external audit, they look at internal audit, they look at internal controls, they look at whistleblowing. And then it says that other than that, they also have a general responsibility for risk management activities. And then it also said that all the directors or NEDs of audit committee are finance professionals. And now in that case, now the question says, will it make sense? What will be the advantage of having a separate risk committee for this company? And now you will have to give the advantages, but in context of the case. You will say that having a separate risk committee will mean that that committee will focus more on risk management. Currently, the audit committee is not focused on risk management because their core task is accounts and audits. Then you will say having a separate risk committee will bring more specialization and expertise. And then you will link with the case. You will say that currently the audit committee, all the directors are finance professionals and none of them have any expertise in risk management. You know, and this is how you built your case. Good question. I liked it. I enjoy these type of questions, more exam related rather than fairy tale questions. Do we need to worry about ethics committee? No. Okay. Remuneration and reward of that. Now I want to speed up because our speed is very slow. Remuneration and rewards of directors. So Number one, who decides the remuneration and rewards? It's basically the remuneration committee proposes and the shareholders they approve. Okay. So there is one important thing, that remuneration has to be linked with performance. The director should not be on 100% fixed salary. Some portion of their remuneration needs to be linked with performance. Okay. So they must have a fixed pay, that's fine, but then they must also have a variable or a performance based component like bonuses or share options. Okay, so if they perform, they will get this. If the director doesn't perform or the company doesn't perform, they don't get this. Okay, and that's the main thing. Diversity in the board. Diversity means that you have a variety of people in the board of directors. Like for example, if the board of directors consists of only only people who are aged people like 55 plus of age, that's not diversity. Or if it just contain only male and no female, that's not diversity. Or if it contains all finance professional and no one else on the board, it's not diversity. Diversity means that the board should have variety of people. And variety in what sense? Variety in terms of age. So there must be some aged people, some not so aged people, some young people. And variety in terms of gender, like a male and female should be also there. In fact, in some of the jurisdictions, now it's mandatory for listed companies that at least 1/3 of the board should be female. Okay, gender diversity. Then educational or professional diversity, that some people must be, they must come from different backgrounds and professional experience. Number of year of experience can be diversified. Ethnicity, like religion or color, or so normally whatever, the board should represent the diversity which is there in that particular society. Okay, so what's the advantage of diversity? It's a wider pool of talent, yeah, broader range of ideas, more representative of the community, enhanced reputation and compliance with listing regulations. However, diversity has its own limitations, may lead to subgroups, or board may ignore the views of minority diversified members. So you guys can just read, this is very self-explanatory. You just need to know the concept. What is the meaning of diversity? Couple of advantages, couple of disadvantages. Another hot topic is insider trading. I'm sure most of you know what is insider trading. Insider trading means buying or selling of company shares by its own directors based on information which is not publicly available as yet. So, directors, by virtue of their position, they have access to confidential information which is not known to the public. So it's a listed company, but we have not yet published that information to the public. Directors do happen to know these internal information a bit beforehand. So they should not misuse their position. They should not misuse their information for their personal advantages. It's completely disallowed and illegal. This is called insider trading. So insider trading is not allowed because it is against the professional ethics. It is against the agency, principal agent relationship, whatever. So bottom line, insider trading is not allowed. It's unethical. It's illegal. It's against the professional code of ethics. Okay. Uh, Family owned versus listed company. So there are two types of company. One is a pure listed company, and the other one is a private company, or generally family owned organizations which are private companies. So what are the differences? You must be familiar with the difference between family owned business versus public or listed companies. This is a very important topic. So family owned business is obviously owned by family members, but the listed company is either owned by individuals or institutional investors, general public. Okay. Family owned are mostly private limited companies, whereas listed companies are obviously listed companies. Now, because family owned is a private limited, lesser regulations and corporate governance requirements are applicable. Very few requirements are applicable because it's a private company. But if you are a listed company, then stringent regulations and corporate governance requirements are mandatory for you. In family owned, the role of chairman and CEO may be with the same person. But in a listed company, the role of chairman and CEO has to be split. In family owned, the freedom of taking decisions is, it's family. The dad is there, the son is there, the daughter is there. They all decide and take a decision. But in listed company, decisions are based on majority or voting rights. Okay. In family owned, there is no NED or few NEDs with weak position. But in a listed company, there are significant number of NEDs having strong position. We just read about NEDs and what should be the number of NEDs, 51% or 33% or sufficient number. No board committees may be found in family owned because it's not a corporate governance requirement applicable to them. But in the listed companies, there will be formal board committees, less focus on internal audit, high focus on internal audit and risk management. You need to remember this, okay? It's easy, it's dry, but it's simple. Last topic before we do a question. Extra internal controls in a listed company. So it's easier, in the exam, okay, it will be difficult for me to explain in the exam. I'll explain later. There are some extra internal controls in a listed company, which you will not find or you may not find in a family business. For example, the role of chairman and CEO is split. You will find this in listed company. You will not find this. So this is stronger segregation of duty, better control. And then you will find sufficient number of NEDs, whereas in family owned, you will not find any NEDs or very less NEDs. Then board committees, there will be a proper internal audit function, there will be a whistleblowing arrangement. So these are some extra controls which you will definitely find in a listed company by virtue of corporate governance and listing requirements, which you will not find in a family business. Okay. So guys, let's do this question and then we take a break. Okay. And you will, I think you will enjoy this question. So this is exam question practice number 4, specimen paper number 1, specimen paper number 1. Company name is DCS. Question number 1B. Okay. Read overview, background report, first para, and transcript of interview. So professional skills is skepticism. So I need your attention on skepticism. So there are 5 professional skills, and in my personal view, relatively the most difficult skill which normally students find difficult to apply is skepticism skill. So can I have your attention here, please? So skepticism means you have a questioning mind. You challenge the views of the person in front of you. Obviously, you will challenge based on logic. You will be respectful, but as a director, you should not accept anything on face value. You must thoroughly review the information which is provided to you. You must ask some questions to make sure that the information which is given to you is proper and the person has done proper homework. So skepticism means you don't trust someone and you ask questions, you satisfy yourself, then you accept that information. Okay. Now, how do you demonstrate skepticism skills in an exam? So in skepticism skill, you need to change the way you draft your answer. Perhaps this is the only skill where you need to do something different when you are drafting. So for example, in evaluation, you just make sure that you cover both pros and cons. You don't have to change the way you draft, just cover pros and cons. For communication, you just make sure that the format is complete and you understand the reader and you write in according to the reader's seniority. But in skepticism, you will have to change the way you draft. You adopt a negative tone while you are drafting your answer. So adopt a questioning tone using words like I disagree, or it seems incorrect, or it's not clear, or it should be further investigated, or it's missing. Go negative. So when you use words like I disagree, or it seems incorrect, it doesn't seem logical, it's not clear, it needs further investigation, all this will help you get marks on skepticism skill. Okay, not difficult, but you need to actually focus on negative drafting. If you just keep on drafting the way you are drafting, the rest of the questions you will not get skepticism marks. You need to deliberately change the way you draft and adopt questioning tone or a negative tone. Okay, so this is question number 1B. So I'm in the CBE format. This is specimen paper 1, question number 1B. Okay, so required, explain the key weaknesses of the current governance structure of DCS company since it became a public limited company, recommending how they should be addressed. Explain the weakness of the current governance structure and recommend how it should be addressed. Professional marks available for skepticism. So we just need to identify weakness. We say this is not right, this is not correct, this is wrong. That's it. This is the kind of tone. How many marks? 12 plus 2, 14 marks. Now, can anybody tell me how many number of points I need to, how many weaknesses I need to mention for 14 marks? Should I divide by 2 or should I divide by 3? Divide by 3. Very nice. And if I divide by 3, how much do I get? 12 plus 2 is 14. Divide by 3. I think approximately 5 weaknesses along with recommendation, right? 5 3s are 15. Okay. 5 weaknesses we require. And I would prefer a tabular format. Remember, whenever there's a weakness and recommendation, I would prefer a tabular format. Now, I don't want to waste your time in, I know you want to go in a break. So I'll just skip some things. So let me highlight some important things. You are Hui Louis, nice name, a management consultant leading a small team which has been commissioned to prepare a consultancy report for data communication services DCS companies director to help them. Okay, so what is your role? What is your name? I'm Hui Louis and I'm a management consultant, and I think I am an external consultant, right? So my way of drafting would be a third party tone. That's one thing. The other thing is, if I read the background, just the first paragraph, a data communication systems a public listed company. Aha. It's a publicly listed company on the small companies. Used to be a privately owned company established 18 years ago by computer engineer J. So it was initially a private limited company for last 18 years, but now it is a publicly listed company. The 30% of the flotation was purchased by institutional investors. Oh, forget it. Okay, it's a public listed company. Now let's go to the main exhibit. This is the exhibit. It is a transcript of interview between transcript of interview with CEO. You versus the CEO. Now this is a very interesting exhibit. The requirement is we are supposed to find out weakness of current governance structure and recommend. Okay. It will take maximum 10 minutes, guys. Just bear with me. Thank you very much, Mr. Priya, for showing me around the office and factory. I found your staff and their comments very interesting. First of all, could I ask you to tell me how you would describe how your company is structured and managed? I would describe DCS as a highly centralized, as fairly highly centralized. I suppose in management speak, we would describe the DCS management structure as a functional bureaucracy. We prefer not to allow too much managerial or departmental autonomy for their own good, of course, and to ensure that they act in the best interest of DCS and to avoid irresponsible risk taking, which unfortunately has happened occasionally in the past. We expect middle managers to respect and respond positively to senior management requests or directives and not to question these unless they are very sure of their facts. Forget about it. Would you mind, because I just read this, but there's nothing wrong in corporate governance aspect. Okay, there might be management issues, but management style is different, but nothing wrong in corporate governance. Would you mind explaining how your company is directed by describing your corporate governance arrangement? Yes, I can. Please look at this chart. And look at this chart, guys. It's a listed company. Do you see this? Chairman and CEO and chairman, Mr. Java himself. And then marketing director is Jules. Production IT director is Tony. Finance director is Tosh. HR director is Trish. And non-executive director is Asaf. So there is one non-executive director. Okay. Now, since 2016, DCS has been governed by a board of directors with me acting as CEO and chairman, giving me sufficient control to effectively direct the company and take strong leadership over the board, encouraging debate and driving agenda. Bullshit. Big weakness. Okay, no segregation of duty. A lot of power vested in one person. Other directors cannot challenge the CEO, right? The board comprises of a marketing director. He was my original sales manager employed by the company, who I have known a long time now. We also have a production and IT director, Tony, who has been with the company for over 10 years. So anything wrong with being there for 10 years or being there from the first year and being good friends? It's not wrong as long as they are executive directors. It will be wrong if they are non-executive. Okay, do you understand? He has a strong background in data communication. Tosh is our finance director. He joined the company just before the company was listed on the National Stock Exchange. Trish is our female HR director. Very interesting. Eh? He mentioned the word female, but forget it. I'm just highlighting it just out of interest. And we also benefit from an independent, non-executive member of the board. Okay, we were very fortunate to appoint Asif. Now, who is Asif? Oh, Asif is the non-executive because he is a very talented businessman and also an executive director of one of our two largest supplier. Do you understand? So Asif is a non-executive director here, but he is also an executive director of one of our two largest supplier. This means that he has really good knowledge of our business and on the come on. This is really useful background. So what about standing governance committees which presumably report to the board? We have an audit committee constituted of three experienced, what? Excuse me. We have an audit committee constituted of three experienced network engineers who focus on and investigate internal control and quality failures when they arise. Now, who the hell are these three network engineers? I never saw them on the board. None of them is network engineer. So, which committee is this? Ah, okay. To promote more independence, we have also appointed a non-executive director as chairman on this committee, who is a former compliance officer at an airport whose background is in air traffic control and aviation regulation, but she is also a what are they saying? So they've appointed some another outsider as chairman of audit committee, and she's not on the list of directors, you see, and she's an air traffic control person. My God, are you guys following this? Let me look at comments. Are you guys understanding? Are you guys able to see these big flaws with the corporate governance? Very nice. That's the whole purpose. So what about a risk committee? And do you have nominations and REM committees? DCS has no separate board appointed risk, remuneration or nomination committee. Very good. Ooh. Come here. As for salary, we strongly believe that all board members should be on fixed salary to encourage them to take a longer perspective rather than rewarding them with short-term performance bonus. So all of them are on fixed salaries. No component is linked with performance. As far as recruitment is concerned, okay. Now that you are a listed company, how do you report to and engage with your shareholders, particularly institutional shareholders? DCS does not have a special governance or reporting structure to engage with shareholders, including institutional shareholders. But of course, we do meet our minimum company law obligations in relation to statutory reporting to shareholders. Okay, fine. That's it. So are you guys able to identify some weaknesses? So we open the word processor. Hello. So for what format was required? Format might be mentioned in 1A. Okay, now no format is required. So we'll just directly start task 1B. Don't forget to give the task number, okay? Because all the tasks will be in the same worksheet. Task 1B, following, let me copy. Following are the key weaknesses. Control C. Following are the key weaknesses and recommending how they should be addressed. Insert a table. Where can I get a nice table from? Table. Let me pick now. Table is here. I click on table. I need 2 columns and some 7-8 rows. Okay. Here I would write weakness. Here I would write recommendation. I will select them. I will heading 3 and I will send. Quick. First weakness. You paste it here. You will say the role of chairman and CEO is not split. Currently, what's the name of the guy? Java is acting as both CEO and chairman, giving him sufficient control. Okay, but then what's the negative thing? Why is it a weakness? However, there is no segregation of duty. A lot of powers is vested in one person and other directors cannot talk to him if they disagree with anything. Full stop. What will be the recommendation? I'm not going to draft recommendation, but you can easily understand what do you recommend that the role of because DCS is now a publicly listed company on the small companies exchange. The role of chairman and CEO should be split between 2 persons, with preferably chairman being a non-executive director. Okay. Second weakness. This thing. If you just copy paste here. So non-executive director Mr. Asaf is not independent in true sense. He is also an executive director of one of our 2 largest companies. This, why is it a weakness? This will cause conflict. of interest as Asaf will be more inclined towards his own company benefits. Okay. Recommendation: the non-executive director should be completely independent, and either Asaf should give up the executive director position, or we must find or replace Asaf with another person who is independent. Okay, so now you understand the hang. Now I want you to do these questions on your own, so that now you should be able to, today is the third day, so you should be able to now handle these questions. So, but I can verbally discuss. Okay, what about audit committees constituted by three? There are couple of weaknesses here, so that we can make these 2 points. Number one, we will say that the audit committee does not include the board directors. Okay? Remember, all the committees are made up of the board directors. You can't have separate board directors and separate outsiders in the committee. The outsiders are not responsible. They have not been appointed by the shareholders. The board has been appointed. The directors are responsible. So first thing is that the board, maybe because they didn't have sufficient NEDs, only Asaf is there. So that's why they, brought people from outside. So I think they should increase the size of the board. They should increase the number of NEDs so that they can have proper committees. Second thing is that these guys are not finance and audit experts. They are network engineers. Thirdly, whoever is leading them also does not belong to finance and audit. She is an expert in air traffic. Perfect. And then there is no separate committees for risk, remuneration, and nomination. That's another weakness. For salary, it is all fixed. Nothing is linked to performance. That's another weakness. So I think we ended up with 5 or 6 weaknesses, right? Let me take some questions. Sir, you missed no formal induction. Yeah, the RIA formal induction is kind of nice thing. The more mandatory thing is having a nomination committee. So if a nomination committee is there, but you can, if you're running short of points, then you can also take this point. It's not wrong, but I want to restrict myself to the big ticket items, 5 or 6 big weaknesses. So there is no issue if you don't remove the time written. No, you have to remove the time written. No, I just need to delete it. What's the biggie? So did we demonstrate skepticism? Faz, thank you. Faz is asking, did we demonstrate skepticism? I don't know. Let me go back and check. Where is it? So it all depends on my tone of drafting, especially the weaknesses. So I'm saying the role of chairman is not split. I think that's a negative sense. Executive director is not independent. That sounds good. And then, so I think when you point out a weakness in a straightforward manner, saying this is not right, this is not done, it doesn't have members, doesn't have independence, you will automatically get skepticism point. Okay, Faz? Yes, I think that's why I left this question incomplete, so that I now want you guys to practice. For the first 2 days, I did a lot of finger holding because I wanted to show you the technique of linking and drafting and formatting. But now today is the third day. Slowly and gradually, you should be able to attempt. Okay, sir, can you please repeat the female NED who works in airport? She's not a NED. I mean, she's not on our board of directors, right? So she's an outsider because we have been provided with the list of board of directors and there's no mention of a female lady with air traffic controller. Okay, only one NED. Good point. That's also a weakness, that only one NED position is there out of, I don't know how many directors are there. Good one. So there are how many directors? One, two, three, four, five. Total six directors, right? Including the CEO. So out of six directors, only one seat is non-executive. At least I would imagine one third or 40% should be NED. So yeah, that's a good weakness, that with less number of NEDs. There are insufficient number of NEDs. Okay, very good guys. Aren't you guys tired? You guys look like you are fully charged. You guys need a break? Battery low? Okay. Yes, I think we did overrun a little bit on the break side. It's almost 2 hours. So just 10 minutes break. It's 9:20, no, 10:20, 10:30 I will resume. We have to do integrated reporting and do a question in 1 hour. We can talk on gender balance in the board. Yes, you can. But if you have already five or six stronger points, then avoid these smaller points, okay? Because gender may not be a corporate governance requirement in most of the jurisdictions up till now. All right, 10 minutes break, huh? We'll see you at 10:30 exactly with integrated reporting. Over and out. Hi, hope you guys are back. Can I get 5 yes so that I know that I'm loud and clear? Oh, excellent. Thank you. All right. Okay, okay. Awesome. Right. So, yes, this is the question which is divide by 3. Okay, 14 divided by 3. And let's do integrated reporting. And if in the end I get some time, I will show you how to identify 1:1 exhibit versus 1:many. Okay. Maybe this is not a good question because the specimen questions are not good ones. Maybe we pick up a real paper and then decide. But as of now, my first target is integrated reporting. So before, let me hide some stuff. Okay, we'll just talk about. So integrated reporting is a topic which was not there in the previous syllabus, or it was there but with very low priority or focus. But in SBL, integrated reporting has been given a lot of emphasis. Okay, so I think it is a important topic from exam point of view. Okay, now let me try and make it very easy for you. Let's, as usual, try to keep it very simple. Stick with the basics. Okay. In order to understand integrated reporting, let me ask you one question. What do you think are the drawbacks of financial statements? Take 10 seconds and think of at least 3 limitations or drawbacks of a financial statement, perhaps from the viewpoint of a shareholder or an investor. 10 seconds. Think of 2 or 3 disadvantages or limitations of the audited financial statements which are normally published by these listed companies. Very good. Number 1, it says it is historical. Do you agree, all of you, that financial statements are historical? Obviously, they are historical. Whereas, what do investors want? So if you are a potential investor, if you want to decide whether I should invest in this particular company or not, so historic financials would definitely help, but I also want to see the projections, because that is where my dividends would come from future profits, not from past profits, right? So the one of the biggest disadvantage of financial statement is they are historic, whereas investors, they expect some futuristic financial projections as well. Number 2, the audited financial statements or the annual reports which we publish every year is majority financials. Okay, so 90% of it is financials, and most of it is technical financials like deferred taxation and retirement benefit, long technical disclosures and all whatnots of IFRS. But to a simple investor, he is just not interested in only financials. He's more interested in business strategies and your business plans and all those things, because they come first, and then financials are a byproduct or a result of your business decisions and business strategies. Correct? So the financial statements, they don't show you, they provide a lot of information on numbers, but they don't talk about the qualitative or the business side. what else? They do not talk a lot about social and environmental aspects, correct? We all are familiar with the standard financial statement. There is a P&L, there's a balance sheet, there's a cash flow, statement of equity. That's it. They do not focus on social and environmental activities. Okay. And then they are mostly focused towards shareholders. Their target audience is largely shareholders. So they kind of ignore other stakeholders, other key stakeholders. All right. So there are definitely drawbacks of financial information. So let's look at the differences. So basically, keeping in mind the drawbacks of the financial statements, another kind of statement was introduced, it is called integrated reporting. So financial statements, they follow a particular framework, right? IFRS, issued by probably, I don't know, IFAC, right? And similarly, integrated reporting has its own framework. So there is a global integrated reporting body. I don't remember the name or when it was set up, but IFR integrated reporting also has a proper framework, and it is also governed by a proper global association or body. Okay. So now let's compare. Financial statement focuses on financial information, whereas integrated reporting focuses on overall business performance. So financials is also a part of integrated reporting, but basic financials. They don't talk about deferred taxations and pension plans. They talk about basic profitability, basic balance sheet, but then they talk more about the business performance, business actions, business plans. Financial statements focus on historic performance, but integrated reporting, they focus more on future strategies. Financial statements focus on share capital, right? Obviously, but in integrated reporting, they focus on something called six capitals. Less emphasis on social and environmental aspects, whereas integrated reporting integrates social and environmental aspects. Short-term annual results, long-term value creation. These are basically the exact opposites of financial statement. More business focus, more futuristic, more focusing on in social and environmental aspects, more focusing on other stakeholders apart from shareholders, and more focusing on long-term wealth creation rather than annual profits or losses. Do you get a high level picture of what is an integrated report? Actually, this is why it is called an integrated report, because it integrates all the components of the business, the financials, the social, the environmental, the value creations. It integrates everything in one report, whereas financial statements is just a stupid financial statement. Are you guys clear on this sheet? Any questions? I will come. Okay. A very good question is the financial statements are audited. Integrated reporting is also audited. Yes, they are audited, but integrated report are very subjective in nature. This is one of the drawbacks of integrated reporting. It is subjective, and to audit something so subjective is difficult. So we will talk about this in a few minutes. Okay, I see some relevant questions, but I'm going to answer them in the next slide. So this is just a basic introduction. So now, what is the definition of IR? Or can I say, what is the role of IR? So this is a bookish definition which you will have to remember. And integrated reporting is a concise communication demonstrating the link between four things. Okay, it it covers four things. It talks about the governance, it talks about the strategies, it talks about the financial performance, and talks about social and environmental context. It kind of links all everything from governance, like mission. From mission, it goes down to strategies. Then from strategies, it goes down to financial performance. And then after that, it also covers social and environmental aspects. Plus, it shows how organization creates value in short, medium, and long term. So this is a standard bookish definition of what a integrated report is, and you will have to remember this bookish definition, because sometimes the examiner may ask what is the role of integrated reporting. It will never say define integrated reporting. It will ask it indirectly. It might say what is the role of integrated reporting, and you will have to remember this definition, and you will have to remember this definition. They will talk about their future plans and future strategies, and they will talk about six capitals. And sorry, there's one more item, financials. There will also be financial performance as part of the integrated report. Okay, so simple stuff up till now. Now the interesting bit. There's a problem with the audio. Technical team, I'm waiting. Okay, hello. Are you guys able to hear me? If you are able to hear me, are you guys able to hear me? Voice is lagging, voice is breaking. Oh my God. Let me check my internet. Internet looks good. Okay, so all right. So I'll just repeat, no problem. I'll just go back, and what I was saying is that this is the definition. Okay, and in the exam it will never say define integrated reporting, but it will say what is the role of integrated reporting. Just remember this definition. So what is the role of IR? It is a document which demonstrate link between the governance, the strategy, the financial performance, and the social and environmental context of an organization. And it shows how organization creates value in short, medium, and long term. What are the contents? Overview of the organization, detailed analysis of the external environment, perhaps using Pestel and Porter 5, SWOT analysis, future strategies and business plans, six capitals, and plus add this one. Also, the financials are part of integrated reporting, but not that detailed financials, basic financials, which a normal investor would like to see. Okay. Oh my God. Hi guys, just wait a minute. I am calling the IT technical guy. Just give me 1 minute. Okay. Let me sort this out because it is breaking the tempo. Hi Ubaid. Lots of students are saying there's a voice lag. Hi Ubaid. The voice testing 1 2 3. Voice testing 1 2 3. Ubaid, you are able to hear me? Is it clear? Okay, just double check. All right. All right. Thanks, Ubaid. Thanks. Bye. Guys, they are telling me nothing wrong from the technical side. Okay, thank God. Thank God. All right. Let's move on. Now, the important thing, the six capitals. So you remember one of the difference was between financial statement and IR was that financial statement talks about share capital, but in IR it talks about six capitals. So I'm an accountant myself, so I never understood what are those five extra capitals. But it is IR, it is a different perspective, right? So the first capital is financial capital. Obviously, when we say financial capital, it is basically the overall financial performance. So the standard ratio analysis or whatever with the analysis we do on financial statements, like we look at the profitabilities, we look at the balance sheets, gearings, all those things. It is all covered under the heading called financial capital. Plus, it also includes sources of funds for future strategies. So do we have, how easy is it for us to raise finances in future? Okay, so information will be given to us. If, for example, if our gearing is high, then it will be challenging for us to raise future financing. But if our gearing is very low, then we can raise finances, right? So these sort of things are all covered under financial capital. Manufacturing capital is the second capital. It covers tangible assets, both non-current assets and current assets. Okay, so you will be given a set of data, and you will see whether the current assets or current assets or non-current assets are going up or okay. If it's going up, you will say the manufacturing capital is improving, and if it is going down, you will say manufacturing capital is depleting. Okay, this is some standard word. Just keep in mind, manufacturing capital includes non-current assets as well as current assets, particularly stocks and stuff used in manufacturing. The third capital is called intellectual capital. Now this is more about intangible. So manufacturing capital was about tangible, whereas intellectual capital is about intangible. Okay. So what do you include in this? Research and development, brand, patents, technical or research and development staff. Okay, so main component of intellectual capital is research and development or innovation. Okay, human capital, it talks about our employees, the employees' knowledge, skills, experience, productivity, and efficiency, the turnover, the employee satisfaction surveys, anything and everything to do with our employees is part of human capital. So in the exhibit, if any information is given about your employees, you need to cover that under human capital. Let me look at any questions you have. Before I move on, are we supposed to make a no? Not at all. Toshi, please ask which I went to the slides. Such this kind of question you can ask me on my WhatsApp. Okay, nothing. So that means it's going simple now. Social capital. You remember the four things I talked about yesterday? Social capital talks about customers and suppliers and communities and government. Okay. If our relations with them is, we will say social capital is depleting. And lastly, the sixth capital is natural capital. Natural capital means environmental matters like carbon footprint, CO2. You know, though we talked about social and environmental yesterday. So the social matters we talked about yesterday is covered under social capital, and the environmental factors we talked about yesterday are covered under natural capital. Okay, so sixth capital means financial capital, manufacturing capital, which is fixed assets plus current assets, intellectual capital, which is research and development, human capital, which is all about your employees, social capital covers your customers, suppliers, communities, government relationships, and natural capital talks about ecological or environmental factors like pollution and carbon, etc. Easy, right? We will do a question on this in 5 minutes. So now, what is the advantage of integrated reports? Why do organizations they adopt integrated reporting? So first of all, it is a voluntary disclosure. What is a voluntary disclosure? A voluntary, so there are two type of disclosures. One is called mandatory disclosures and the other one is called voluntary disclosures. So organizations and listed companies, they obviously have some mandatory disclosures to follow, right? But voluntary disclosures are those disclosures where there is no legal requirement, but the organization on its own volunteers to disclose extra information for the benefit of its shareholders or stakeholders. So a voluntary disclosure is always seen as a good gesture from the organization. So it enhances the organization's image and reputation for transparency. That's the first advantage of integrated reporting. Enhances image and transparency. Then it also is effective communication with all stakeholders. Keep in mind, it says stakeholders. A financial statement is mostly for shareholders, right? But this one tries to cover all key stakeholders, particularly the customers and social impacts and environmental things. It integrates social and environmental aspects. It focuses on six capitals, demonstrate how a organization creates value. All of this I'm picking up from here. The differences is basically the advantages, right? Enough. What's the disadvantage? Too much commercial information strategy is disclosed. So in a commercial organization, you can't afford to disclose your future strategies and your future business plan and how you plan to create value in future. You can't disclose that because you are a commercial organization. So integrated reporting is not suitable for profitable or not profitable commercial organizations whose objective or mission is to maximize profit, because you can't and you should not disclose these kind of information for public reading, right? So then which type of organizations they use integrated reporting? So normally the public entities, like government owned entities which are run on taxpayers money, they are adopting IR because they need to demonstrate that they are effectively using taxpayers money, they are adding value, and they need to touch base with lots of stakeholders. Charitable organizations, they tend to use integrated reporting because they want to, appeal to the donors that they are working properly. Global bodies like ACCAs and all those not for profit organizations, they adopt integrated reporting. Okay. uh, have you seen ACCA's integrated report? Let me show you. That just occurred to me, it would be interesting. ACCA global integrated report. Oh, this one, integrated reporting 2019 ACCA annual report. So this is basically ACCA's integrated report 2019. Let's look at it. I will not go into details. I am just teasing you guys. So contents, value creation models, global context, stakeholders engagement, and our mission, core values about this report. This is our 8th annual integrated report. Very good. Now look at these KPIs. Employer satisfaction. You see, let me employer satisfaction. Um, Employer satisfaction, employers preferring a new recruit, overall growth, satisfaction from learning providers. They're not talking about student. Who is this guy? You see, so just take out, if you get some time, take out some time and try and read ACCA's integrated report. Okay. Let me get back to this. And then the second disadvantage is valuation of 6 capitals is subjective in nature. So how would you value, how would you place a monetary value to human capital? If your employees are satisfied, how would you do a financial valuation? So integrated reporting is very subjective, difficult to audit, obviously, and they are not given any prescribed format. They just say disclose whatever you want so that all the stakeholders understand you and they know what your future plans are. Okay. Any question, guys? Before we start, a question. Who's that guy? I don't know. James Bond? Can we relate succession planning to intellectual capital? Succession planning of normal people staff would be human capital. Succession planning of your scientists and people in research and innovation would be part of intellectual capital. Okay, let's do this question. I have exactly 30 minutes left. SBL specimen paper DCS question number 1A2. 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 Yeah. From the information you have collated, draft. This is the same question which we did for this corporate governance. Okay. Draft a section of the consultancy report for the directors, including the following. and an D2, right? So the first one is an analysis of the industry and market which DCS operates, and DCS is competing in using an appropriate model. Which model will we use to analyze industry environment? Do you know? Which model is used for industry analysis? Quota 5, very good. And the second part is 15 marks is the for part 1A, A1, and A2 is evaluation of the overall performance of DCS company between 2012 and 2015 from an integrated reporting perspective. Very interesting. So he wants you to evaluate the overall performance of this company, but from an integrated reporting perspective. So when we analyze the performance based on integrated reporting perspective, always keep in mind that you then need to talk about the 6 capitals. Okay, it's 12 marks, but then there's professional skills available for evaluation skill relating to DCS company's environment and performance, which means 4 marks is for both 1 and 2. So I will split 2 marks for A1 and 2 marks for A2. So A2 will essentially be 12 marks of technical plus 2 marks from professional. So 14 marks. So for 14 marks, I need to give 7, 8 points, right? So, okay. So the first thing is draft a section of the consultancy report. So I'll just show you a section of the consultancy report. This is task 1A, 1, no, 2. A section of a consultancy report is very simple. You will write okay. You will underline, you will center, you will paragraph heading 1, and then no need for to, from, subject, date or introduction, because this is not a report, this is a section of the report. Okay, so you just give a heading section of a consultancy report, and what do you want to call this section? I will just go to the requirements and I would give a name, evaluation of the overall performance of DCS company from an integrated perspective. So I will call this section something performance of DCS from integrated reporting perspective. That's the section. Okay, I will just do underline and I would do heading 3 or remove the underline. That's it, and now you will start answering. So there's no particular format for a section of a consultancy report. You just give a heading section of a consultancy report, give a name to that section, the name of this section, which I think should be performance of DCS from an integrated reporting perspective, and then you start drafting. Okay, I'm closing this and let me open extracts integrated reporting data. So it's a spreadsheet. Okay. So let me increase the size if you want. No, it's too big. Right, so this exhibit is given and they have asked you to evaluate the performance of DCS from an integrated reporting perspective. So the first thing is we will talk about Financial capital. Okay. Here we will talk about P&L, we will talk about balance sheet, we will talk about gearing, whatever the information is there, we will talk about. Okay, so financial performance, all figures in dollar million. Financial period 2012 to 2015. Okay, I give you guys 1 minute to analyze this data. 1 minute. Let's see whether, so always first analyze sales. I give you 10 seconds for sales. Is it increasing or is it declining? 10 seconds for sales. Right, so sales has increased, right? Now the interesting thing is the data provided to us is for last 4 years. Because we are short of time in the exam, I cannot or I should never calculate year on year increase. That will take lots of time. So can you guys tell me how much percentage sales has increased from 2012 to 2015? Can anybody calculate how much percentage is the total increase from 2012 versus 2015? So I would calculate 6.95 divided by 4.75 minus 1. 46% increase in sales, right? Do you understand that sales has revenue has increased by 46% over last 4 years? Correct? Let me look at comments. 46%, yeah. No introduction para because this is a section of the report, not a proper report. So I will write now the sales revenue has increased by 46% from between 2012 to 2015. But I just noticed, is it increasing consistently or does it decline somewhere? So 4.75 and then it increased to 6.8, that's good. And then again it's increased to 7.4, but now in 2015 it is now the lower than last year. Did you guys notice it? I will just make a note of it. I would say, however, any rocket science? Is it not very simple? So I'm done with revenue. The next thing we look at is gross profit. 2.1, 2.55, 2.55, 1.98. Now the gross, so my sales have increased from 2012 to 2015. Sales have increased by 46%, but my gross profit has decreased. That means there is something wrong with my cost of sales. It is not moving in line with the margins, the standard margins. Can somebody calculate the GP margin of 2012? Can somebody let me know the GP margin of 2012? 44%. Very good. And can somebody tell me the GP margin of 2015? 28. Very good. Let's keep it simple, boys and girls. Next para. the gross profit is declining, has also declined significantly. The GP margin in 2012 was, I don't know, 44%. Yeah, 44%, which has shrunk to 28% in 2015. This shows that the cost of sales are not changing in line in same proportion as that of changes in sales revenue. Class. Simple. Now, what about other overheads? It's going down. Fine. Profit is gone. Profit. Finance cost. Oh my God. Ouch. It's gone up crazy. So profit for the year. So can anybody tell me the net profit margin of 2012 versus net profit margin of 2015? I will just copy paste, Control C, Control V. What are they calling this? Profit for the year. Okay. The net profit has also declined in line with GP margin. Percentage, guys, the profit margin in 2012 was 11% versus 2%. Oh my God. This is because of sharp decline in GP, gross profit, along with what? Increase, along with drastic increase in finance cost. Basic stuff, guys, basic stuff. Okay, you remember, when the more senior you'll go, the more back to basics you'll go. Okay, let me look at questions, if any. I don't expect any questions. Yes. What could a good question, Asad? You are saying, what could be the reason of cost of sales not consistent? Yes, we should try and find out in ideal circumstances, because we have not read the case. We will need to read other exhibits to have an idea, but I can tell you, even from this data, you can see later on that is probably due to the staff cost. They are not able to get rid of staff in the right proportion, maybe due to fixed costs. Okay, right, let's move on. So you're done with P&L. Okay, very simple. Now it comes the interesting bit. There's now something called other data. It says number of employees. Employee related data will go under which capital? Can anybody tell me? Employee related analysis under integrated reporting framework is called which capital? Very good, guys. Going good. Yes. So now let's analyze this data relating to number of employees. So it's 150 and 143 and 135 and 127. So the number of employees are going down, which is good in a sense that your costs might be going down, but it's difficult to analyze as a standalone thing. Okay, I don't know whether this going down is due to sales or what. Can we calculate revenue per employee, please? Can someone calculate for me revenue per employee for 2012? How do you calculate revenue per employee? 4.75 million divided by 150. So it will give you revenue per employee. Okay, while I draft, you guys calculate the revenue per employee. It is called staff productivity. How much is it? Staff productivity. Can I say sales? It's not staff productivity. It is called, or yeah, it is called sales revenue per staff, or even staff productivity has increased from $31,000, 31.6 thousand to $54.7 thousand in 2015. This shows that lesser employees are able to generate more sales revenue. That's it. Okay. Do I have any questions on this? Staff productivity. Very good. 54 point. This is what I wrote. 54.7. Yeah. So what's the other data on staff? It tells me about staff turnover. 4, 5, 7, 10. Oh my God. Is this good or bad? Staff turnover 4, 5, 7, 10. Is it improving or depleting? Very good. So I'm not typing now because I'm short of time. So we will say here another paragraph. We will say, or you can remove this heading. We will say then, however means a negative point. Staff turnover has increased from dash to dash. So overall, so this is not in this sense from staff turnover sense, the human capital is depleting. That's it. Now, if you read the case somewhere, some reason is mentioned somewhere why the staff turnover is high. So if you can remember the reason, it would be awesome if you can write a one-liner reason from elsewhere in the exhibit why the turnover has increased. I remember something is mentioned somewhere. Now, percentage orders delivered late. Percentage orders delivered late. Which capital? Human capital, manufacturing capital, financial capital, social capital, natural capital. Percentage of orders. These are customer orders which are delivered late. Customer orders. Social capital. Manufacturing capital. Why? Those of you saying manufacturing capital, can you just give me a logic? Manufacturing capital talks about fixed assets and current assets, mainly inventories. Okay. If you are delivering late, you are using your customer satisfaction survey, or you are using your relationship with customers. So anything affecting your customers should go under social capital. So you will say that customers forward contract, no, percentage orders deliver rate has doubled in the last 5 years, which means that social capital is depleting. Okay. Someone asked, staff productivity is increasing, right? Is it good or bad? I repeat, staff productivity has increased from 33,000 to 54,000 or something like that. Is that supposed to be good or bad? It's supposed to be good because average revenue per staff has increased. So that means the staff are working more harder. So you are now selling more with less number of people. Okay. Now employee satisfaction survey. Forget about forward. Oh, there's a customer complaint. So again, this will be covered under social. Number of customer complaints has increased. So social will have order late one sentence and customer complaints one comment on that. Just two lines on each. Forward contract, it might go under manufacturing because if their order size or number of orders are decreasing, so their inventory might decrease, but forget about it. Employee satisfaction will go under human capital. Now this one, investment in non-current manufacturing equipment as a percentage of sales. It's decreasing. So previously they used to invest 10% of sales into their non-current assets. Now they are investing only 7% of their revenues in non-current assets. So you will say that the manufacturing capital is depleting. Okay. Let me see comments before it's too late. Yes, excellent, excellent. You guys are on the right track. R&D expenditure as a percentage of sales, it is again, it's gone down by half. So R&D will go into intellectual capital. It's depleting. Carbon emission in 1 kg in kg. Carbon emission in kg per 1000 sales revenue. It was 60 kgs. Now it's 80 kg. So carbon emission, is it good or bad if it's increasing? Carbon emission needs to go down. Okay. If carbon emission is increasing from 60 kg, it's going up to 80 kg, it's bad. Hence, they are also depleting their natural capital. Now, there are, in not all of them, but there are certain reasons mentioned somewhere. So in the exhibit, so you are expected to pick up that reason and paste it here. For example, let's talk about carbon emission. So it's like deteriorating, which means it's depleting. Fine. Do you want to know the reason? Go to background report. Okay, we haven't read it, but I'll show you. External environment. Read this. In fact, just read this one. Although DCS can approximately estimate its total carbon footprint from manufacturer and supply, it has not yet developed formal systems and processes to manage its carbon footprint throughout the value chain. So you just copy this and you go to your Word document, and where you will be saying that carbon emission is depleting, there you will say it is depleting mainly because DCS has not yet developed formal systems and processes to manage its carbon footprint throughout its value chain. You will get 200 marks out of 100. Right. So were we able, how many points we were supposed to give? 7, I think, right? So we were able to give quite a few, like 3 points in finance, and then one human, one social, one natural, one manufacturing. And what was the professional marks about? Evaluation. Evaluation means we need to talk about both pros and cons, which means that did we cover some good points as well as some negative points? Or all of our points was negative? I think there was one good point. There was something good about staff productivity was improving, right? Yeah. So I think revenue was good. No, revenue was also declining last year, but productivity was definitely. So we did cover some good points as well. So done. We are through with professional marks. Yeah, if there is no positive, then you need to write one positive from your own pocket. Okay. So yeah, don't forget that. Good one. Can we skip any capital heading provided we have given 7 points? Yes, you can. Ideally, you should not, because the question says, evaluate using integrated reporting perspective. So if you're not able to find anything, so supposing if you give 7 points under financial capital, and you do not talk about all the other capital, you think the examiner is stupid? Huh? Can you please explain skepticism in weakness? Simple. When you identify a weakness, when you say you are not doing this, you are not doing this, you are not, this is not correct, it is automatically you will get skepticism marks. Okay, so skepticism is easy to score if it comes in a weakness question. But if it comes in some other question, like you need to challenge some other person, then you need to focus and do a negative drafting. Yeah, you are right. All right. So, guys, I hope that I was able to explain a difficult topic, which is integrated reporting, in a very simple layman approach. I hope you guys were able to understand, and nothing more than this is required. So there could be two possible types of questions on integrated reporting. Number one question could be that analyze the performance like we just did. Then that means you straightforward, you analyze the 6 capitals, data will be given. Another possible question on integrated reporting will say, what is the role and value of integrated reporting? So that is more theoretical. You will just say the role of integrated reporting is to demonstrate the link between da 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 da. You will have to remember the definition. And what is the value of integrated reporting? Value means the advantages. The general advantages, it is a voluntary disclosure, so it enhances reputation, it shows social and environmental activities, it is more futuristic, it covers all aspects of business. But obviously, you cannot write general things in SBL. You have to link with the case. So there will be some information in the exhibit which you need to consider. Right. So with this, my time is up for tonight. I hope you guys enjoyed this. Tomorrow we will do some more interesting topics. So I will post the today's handout and the link to the video tomorrow as soon as the video is available. Till then, you guys take good care. Try to do this question at your home. This question and the previous question tonight, which on corporate governance. Please do it with your own hands so that you get hands-on experience. Until tomorrow, take care and good night.